What is up, team? Chuck with Traders War Room, and I'm back at you with another video. Listen, this is your midweek SITREP, and man, what the hell happened yesterday? That's going to be our focus on this particular video. But what I need you to do right now is hit that like, share, and subscribe button, and I need you to come along with us on the journey. Check the description tab. All the tools and tidbits to make you a successful trader are right there. And every product and service that TWR has, our TWR one-to-one mentoring, our upcoming classes, our website, everything you need to get involved with what we have to offer is right there at your fingertips. Now, if that sounds good and you're ready to rock it with us, then all I got to say to you is follow me and let's go to war. And TWR has to remind the viewer that this is not financial advice. All content on this channel is for entertainment and education purposes only. You are responsible for every decision you make. Have fun, use caution, but always, 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 let's go to war. Check out our TWR Discord, man. This is our flagship, man. We got a true one-stop shop for every type of investor out there, beginning to advanced. We got the real-time buy and sell alerts. We're talking options, stocks, futures, crypto, forex. We got live trading, Zoom classes, one-on-one mentor. We got free and paid services, talking stocks, updates, charts, training videos, you name it, we got it. Come check us out today. In the description is a link. Go there today. You will not regret it. And finally, team, our website is live. Come check us out, www.traderswarroom.com. Man, this is going to end up progressively becoming our complete funnel for everything Traders War Room. So come check it out today. This is a work in progress. We are building it as we go, but check it out. Come show us some love, and eventually this is going to be the one-stop shop to get to wherever you want to go with Traders War Room. Here's how your stock market ended yesterday. And man, it didn't feel that way. It was a lot of sideways movement for sure, because being in the green definitely didn't feel that way to me. I don't know about you, but I was not impressed with yesterday's market. All right, and your market movers, okay, of course, we had Ford booming. Zynga, that's an impressive ticker. We haven't seen that one for a while. It got downgraded, so it saw some volume. Apple, AMD, the Qs, SPY, always up there. Top gainers, we had Surge and NXTD. We hadn't seen those names for a while, but they definitely were coming in. Big was coming in as well. And in top losers, we had Dogs and we had Cold. Those were some of the tickers that I was paying attention to. Listen, the losers I like more than the winners, because I start to look for a bottom for a bounce up. So definitely paying attention to both green and red as we move on today. Here we got our sector performance. Remember, we're not concerned about the 1 day. Really, we're concerned about the trend. So we look at the 5 day. Energy is up, man. And I remember I was telling you guys about Energy Financial specifically, that they were going to be up huge. We got healthcare coming in there as well. Need to pay attention to that. Real estate coming up. Consumer discretionary, infotech, utilities. These are the ones that are slated to be kind of weaker moving into 2022. Now, infotech is always going to be huge because of certain companies that are in there, but we got to pay attention because we're starting to see that rotation of monies in through the marketplace into other sectors, value versus growth. There's your futures. Remember, it's just a glimpse into what could be, so we're definitely paying attention to these, trying to build that battle plan to go out there, attack, conquer, and destroy. Top tickers with a lot of buy volume. Tesla always up there. The Qs, Lucid, Apple, Nvidia, AMD, Microsoft, DWAC, and IMMX. Top news, listen. Top news for now and to the foreseeable near-term future is always going to be federal inflation related, okay? Because that is where the sentiment's at. The long-term in the marketplace is weak until we get a legit answer on what is going to happen with inflation. So the stock U.S. indexes rose on Wednesdays after data showed that while the U.S. inflation was at its height in decades, it's largely met economists' expectations, cooling some fears that the Federal Reserve would have to pull back support even more forcibly than already expected. Listen, what they want is an even keel, okay? They don't want any unexpected things moving forward. So if we got inflation rise, cool. let's just get exactly what we have planned out, and we don't want any surprises, and the market will do just fine moving on because it'll start to price it already in. This is interesting. Nearly 80 Kroger's King Scoopers go on strike as talks stall. So we got to pay attention to Kroger today, all right? 8,000 workers at nearly 80 King Scoopers stores went on strike for better wages on Wednesday as negotiations stalled, but the stores stayed open at the Kroger company-owned Colorado chain hired temporary staff and promoted online ordering. So we're going to start paying attention to these grocery stores, okay? Listen, this could be just the start of this particular sector, wanting better wages and better pay and things of that nature, okay? It all goes back to I could make more staying home than actually getting up and going to work. So we got to pay attention to some of these industries, and this one's definitely got my attention. And investors ready for U.S. earnings as inflation worries run high. Listen, we're heading into earnings season, so we got to pay attention. Now, do I expect earnings seasons to hit hard like they have previously? No, I don't, but I expect there to be pockets. So our job is to get into the good companies that are expected to do well, or that we can see the direction. Even if they're expected to do bad, we can make money on the way down. But we don't want to get into just every single one because it's earnings season. We're not at that point anymore. Will we get back there? I don't know, but maybe we can get there further down the line once we get some better sentiment in the marketplace. But right now, we have to pick the winners and the losers that are going to win or lose, and then we got to ride them in the direction that we think they're going to trend. So pay attention, make the good decisions, and we'll come out just fine on the other end making money. All right, and here's what I'm going into finishing this week, moving into next week in some of my longer positions. Man, yesterday was not a good day for me in the marketplace and definitely tested my patience. But I've told you guys time and time again, consistency and discipline pay off in the end, all right? And I stay true to my word. And man, definitely, like I said, patience is key, but patience pays in the end. And as long as you're net positive at the end of the day, that's all you can say. More winners than losers, and your winners make more than your losers lose. You're good to go. And don't forget, if you want my bot pushing the alerts in your server, DM me or send me an email. Let's get the business. And here's what my bot looks like. Now, I'm not telling you what to buy and when to buy it. I'm just telling you what I'm opening up, okay? I'll give it a high risk. I'll tell you the ticker. I'll tell you the price I'm in. I'll tell you the expiration if it's a contract or shares. I'll tell you what I paid for, what my target is, what my stop loss is, and I'll give you little comments on why I thought this was a good idea for me to get into. All right, so what happened with the market yesterday? All right, listen, inflation, okay? There was a lot of sentiment going in. There was a lot of things happening. There was information expecting these inflation numbers that are coming out today. It was all being very bearish, and we definitely saw some downfall into the market as a whole. The SPY, even though we closed higher than we did previously, we were still ended up on the red. So definitely we saw some negative pressure. It was kind of a sideways motion. It was actually a boring marketplace. I mean, there wasn't much action going on, but it just was trickling effect. Some would go up a little bit, some would come down a little bit, but it didn't really have any spectacular motions one way or the other. So it was definitely a hard, market to navigate because you didn't get the direction that you were going. Just kind of just moseyed on in some choppy waters. The Qs looking a lot like the SPY, and it was odd because, for something that looked like this, definitely didn't feel like this, okay? Now, I'm looking at this and I'm thinking green, it looks green, but we see a lot of the pockets of deep, deep reds, okay? And so as a whole, the market was just really moving sideways. Yes, you had the juggernaut companies pushing along, edging a little bit up, but it wasn't doing much, okay? That's why it felt like it was a 50-50, because you got the huge companies making green, and then you got all of the other ones making up some red. And so it kind of just evened out with just the huge juggernaut companies edging out just a little bit to push us into the green zone. Stuff I'm paying attention moving into the end of this week on, okay, this was one of my big chip players, and yes, we ended up higher than we did before, but there wasn't much volume pushing this thing, anything spectacular, man. We need to see more volume on this. I want to see this in the 70s. We need to push. Now, a new ticker. I didn't know quite how to trade this. This was definitely something I got into light. I never traded this ticker before, but I was interested in it, and it definitely has performed less stellar than I thought it was going to. I would like to see this more closer to the 200 area, but we're still down there at that 23 fib line. We need to close this higher. We don't have much time. We need some volume. We need some buying pressure in here, and I just don't know if this is going to get it done by the end of the week. Now, Starbucks is killing me, okay? Definitely one of my least favorite tickers that's out there. This thing does not follow TA at all, man. It should have bounced at that fib line, that 23% fib line, and we thought it was going to bounce and start tracking back up to the 117, but this thing just decided to continually go down. And it makes sense on why it's going down, so I understand they're planning on expanding their organization. They're going to spend a lot of money to restructure their organization for future growth, which in the long term is great, but in the short term, because we want this thing to turn the opposite direction it's going by the end of this week, I don't think we're going to get there. This is definitely one of the losers of the bunch that I've had, and I don't know if I'm going to trade Starbucks very much in the near future until we start seeing signs of reversals. All right, so Bank of America, definitely one of the favorite financial stocks by analysts pick, and it did really well the past couple of days. We're consolidating a little bit now, kind of on a slight downward trend. I expect us to go touch that 78% fib line, maybe even dip a little bit further before we start accumulating wealth again, and then we track up if we start to go into an uptrend reversal. So I think short term, we're going to see that negative pressure. It's going to come down a bit, cool off, which is good for us because we got puts on it. Same thing with Wells Fargo, except we haven't seen the sell-off in Wells Fargo as much as Bank of America here in the past couple of days. I still think this is going to cool down. We need it definitely to cool down a little bit today, come down a bit. We got puts on this as well that expire at the end of the week. We need some negative selling pressure. People, I think, will start to profit take because Wells Fargo has hit so hard the past couple of days. It's another top pick by analysts moving into 2022 in the financial sector, just not the number one pick. Bank of America was the number one pick by the analysts. Wells Fargo was like third, but we need some negative selling pressure. I think we're going to see it. We might end up doing just fine with this by the end of the week. Got to stay patient, it's consistent, and we got to be able to watch it. Roblox, man, this was another one that I thought we were going to go down there and we were going to touch that bottom fib line, and we almost got there, and then it shot right back up, okay? So I'm not sure about this. I'm kind of 50-50 on this one. I think we test that 23% fib line, and then we start to go down again, okay? I think Roblox has hit huge recently, and I think people are starting to profit take because they've been riding this Roblox train for a while. I think we still see some negative pressure moving into, if not this week, into next week before we start to see signs of the reversal and a sharp uptick, okay? Roblox is one of those stay at home, your kids are at home, play this, get this avatar, buy these skins, all this stuff, and it's not making the money that it was making because kids are getting back to school, they're playing outside, they're doing other things. So Roblox, I'm bearish on it, moving into the near term. New segment for you guys, man. In the buy zone. We're going to talk about two stocks today that are in the buy zone that are interesting to me because we're starting to see a rotation. We're starting to see funds moving into these particular industries and companies as a whole. All right, guys, online dating. That's what I'm talking about here. Match, all right? Definitely in a buy zone. I think they're at the bottom. This would be a good idea to start nibbling into positions long and possibly, if we could see rotation, looking into some options on this. So Match, we're starting to see the online dating type of industry starting to pick up steam, okay? People want to go out there. They want to meet people. They want to start dating. They want to flirt. They want to do this thing. And online dating has surged because it's right there at your phone. You can watch TV, flirt at the same time, and then set something up for later. And that's just how our world is rolling to in the near future. I like Match.com from at this point moving forward. Not quite as good as Match, but Bumble's a close one, man. Have you seen the CEO talk, man? She is sharp as a tack, okay? She knows her business and she knows what's caters, all right? I look at Bumble kind of like an online platform of like ladies' night at a bar. When you got ladies' night at the bar, right? Ladies getting free or things of that nature. Who's the majority population at the bar? I'll give you the answer. It's guys. Why? Because they know that the ladies are going to be there. So the guys flock because there's going to be ladies, and it's just one of these things. It's like, ooh, pick me, ooh, pick me, ooh, pick me, and it's ladies' choice, all right? Bumble's the same way. The women are in charge of their destiny and who they want to flirt with, who they want to, match, who they want to do that stuff with, and guys are going to flock. They're going to pay the money so that they can be part in the queue and stand on the line and put their hand up and say, ooh, pick me, ooh, pick me. Bumble, solid company. I like this level where it's at right now. I like Bumble moving forward. I think this is in a buy zone. All right, on the 15th, we got Charting Your Way to Financial Freedom. Listen, 2 hours of nothing but charts, okay? TWR's own Amped takes you through from cradle to the grave, okay, of chart making, okay? Idea is to get plans, get strategies, get lines of support, lines of resistance, patterns, get stop and entry exits, stop losses, stop points, everything you could think of, and creating sexy, easy to recognizable charts. And for 2 hours, he's going to take nothing but real time, your tickers, put them in charts, and give you guys the tools so that you guys can be charting proficicionados yourself. Check the description tab. All the info's there. This Saturday, $15. And then on January 16th, we got Managing Risk and Emotional Trading. Listen, Traders War Room, we have a guest instructor, Pastor Prince. And if you don't know who Pastor is, man, he is a fantastic investor and trader, and he has tips and tools that the pros use to manage risk and have less emotion in their tradings, okay? This is a great class, especially if you want to be an overall all-around trader and investor. You need to have this risk management and emotional class. Again, this is on Sunday at 1 p.m. Central Standard Time, and Pastor Prince is going to take you guys through the process of risk management and emotional trading like the pros do. So definitely $15 again. So we have a double header, $15 per class. You hit the PayPal. The links are in the description. Get yourself this learning. And listen, you guys don't even need to be present for the training. If you register, you sign up, you'll get the Zoom link. Register on the Zoom, you will get the recorded copy within your email within 24 hours, okay? Every person that makes a purchase gets the recorded copy. Promise that. 24 hours, we got you covered. All right, team, and that's the video. Listen, remember, check out our Discord here at Traders War Room. We look at the stock market like it's a war zone, stocks and sectors. Those are our battles. We do it together as a team. Attack, conquer, and destroy, and we're doing it as a community of like-minded individuals who want to grow, learn, and share together. If that sounds good, then all I got to say to you is follow me, and let's go to war.